Okay, folks, welcome to Swing Trading Today. This is Bob Desmond over at the Contrarian Trader, and yes, I'm drinking coffee, a lot of it this morning. So, what we're going to do today is we're going to first, I started early for a reason. I want to test my platform, see where I may or may not be appearing. The goal is to get on Twitch, Twitter, Facebook. We've been having our challenges. And hopefully we are near the end of this journey, or else we're going to have to switch platforms. Good morning, everybody on YouTube. Can you hear me okay out there? So we are live on YouTube and Facebook. Good morning, Facebook. We're live on Twitch. 3 platforms. Now, Twitch, I wanted to go live on because we have a lot of younger viewers out there. They're gamers, and a lot of them that I targeted as being an audience on Twitch, they play stock market games. So they have an interest in the stock market, and I thought I would engage them, hopefully, in some conversation about the stock market. And hey, RL, good morning, brother. So the goal here, again, is to spread the message far and wide with regard to contrarian trading, moving beyond the financial news media, getting our message out, what they call the alternative news media. That's us, I'm proud to say it. And they're certainly not doing us any justice doing their job. All right. So it's 5 a.m. We're going to get cooking here. And we're going to begin with the stock market futures. And I want to talk first about how our day was yesterday. And it wasn't good. And I like to be open and honest. It wasn't good. But I want to talk strategy. And I want to talk about why we sold the market on that surge last week, why we did not re-enter yesterday. Will we possibly enter this market? Yes, because I'm still predicting manipulation of the market higher. So the game plan today is first to hit that like button, subscribe, share with a friend. Please leave a comment, engage, and hopefully we can get to a couple of chart requests. So what we're going to do here is we're going to go over some of the morning headlines. Then we're going to go into the stock market futures, and we'll leave off with some chart requests. I will, of course, be going over some of the symbols that were left in the forum by members for me to review, and then we'll segue over and into whatever time left we have. Hopefully we'll go through 7:30, 7:40, it's not 7:30, 6:30, 6:45 this morning, and we'll squeeze in as many requests as possible because we are on a bunch of new platforms here. And this new program is supposed to centralize all the comments into one page, and it's not happening. And I am not happy about that. All right. So, are we live on Twitter? It does not appear it. So Twitter is still a work in progress. All right, we're going to go anyway. All right. So this morning's headlines, we have off of zerohedge.com, worst slump in a generation with regard to China auto sales continue historic collapse. I've been doing a lot of analysis on China and their debt load, and you think our debt load is heavy? You have seen nothing compared to China's debt load. And I would refer you over to Hedge Eye Capital, Kyle Bass. He's doing a lot of great work, doing a lot of interviews on those in the know in China and outside of China. And they are a bubble in and of itself. It's a major, major problem. And as they become more totalitarian and clamp down on protesters over in Hong Kong, it's really that they show that they're really just a bunch of thugs. You have fentanyl being imported into the United States, causing a lot of damage. It's a reverse opium war. So they're pulling a lot of stuff. Basically, whatever rock you look under with regard to our relationship with the Chinese, there's a lot of rot underneath that rock, and it is not going well, and it's probably not going to end well. We're looking at a new Cold War at some point in time in the future when we get that final moment of, okay, these guys are truly our enemy. So China, historic weakness in, or historic collapse in auto sales. And if they're admitting that, it means it's a lot worse. Shanghai housing sales plunged 86% in Golden Week. That was last week. And their housing bubble, which Jim Chanos has been short of for years. I don't know if he covered that short, but Jim Chanos, famous short seller, had been short of the ghost cities in China. And you could see that they are collapsing. And this could be the beginning of some serious weakness over in China. And don't forget, China is no longer the cheap producer that they once were. You have Cambodia, Vietnam, Philippines. They're all coming online with cheap labor, and you don't have the political risk. You don't have IP technology theft. So why am I talking about China? I'm talking about China because it does impact the U.S. market. They're that big now. So keep an eye on the news coming out of China. And yes, President Xi of China did come out and say yesterday that there's no trade deal. We don't know what you're talking about. So they slapped President Trump in the face. Expect in the coming weeks. I don't think he's got the skin thick enough to allow them to get away with that. I think that he's going to ratchet, meaning President Trump. He's going to re-ratchet up the tensions with China for doing that. I think that he does that right now at his own peril for election season because the markets will react negatively. So I think it's best for his re-election attempts to just stay mute on the subject for now. So those are a couple of the headlines that we're watching. Nothing major out today. The story of the day remains as it was yesterday. Earnings, big bank earnings, Dow earnings, and they are obviously moving the markets. Can I still be seen and heard on YouTube? I just got a blank screen. It says I'm live, but it says please stand by. Somebody could just drop a note, RL or somebody else. Okay, what we're going to do next is we're going to go into the So what we're going to do next is we're going to go into the pre-market activity. And for those on Facebook, you may just be seeing me now. We just went over a couple of news headlines. Nothing major, just some China news. The big theme of the day is going to be the earnings reports that continue to flow out of... Great. Thanks, RL. Appreciate it, brother. Flow out of the big banks and the Dow 30 stocks. So what we're going to do now is we're going to segue over and into the pre-market activity. I want to begin with the dollar. there's a theory out there that the Chinese are, in a way, supporting the Hong Kong protests in their efforts to try to get Hong Kong to depeg from the U.S. dollar. There's also a theory out there that the unrest that you're seeing over in Saudi Arabia is again being supported vis-a-vis China trying to get the Saudis to go off of the petrodollar by causing a lot of angst in the Saudi royal house. And if they feel destabilized, they'll do whatever it takes to maintain their hold on the region. Now, the goal here is to remove the dollar as the main currency of the globe. Nobody's going to replace it with the yuan. I mean, it's not a real currency. So I'm not sure what they want to replace it with. Even the oil exchange that they have over in China isn't taking off as they once expected it to. So the Chinese have their own set of problems. I think they're a little bit delusional at this point in time, but there's a move underfoot to have the globe de-dollarize and do business either in euros at current. It's certainly not going to be the yuan. I don't think it's going to be. Again, it's not a real currency right now. So the dollar at current, this is a 4-hour chart. These are going to be all 4-hour charts because we're talking about the futures action. We may drill down some, but the dollar took it on the chin yesterday. On a daily basis, we had an outside reversal day. It appears as though we're probably going to put in newer lows on the day, despite the fact that we are up this morning. I predict that we're probably going to fade after the open today. We saw the same yesterday. We put in a new daily high, and we faded. The question is, will we see a bid put under the price of gold, silver, the gold miners, of which we are long of? And I began this commentary out earlier with regard to how our day was yesterday. It was not wonderful. We are long of the gold miners, very long. It's a core position going out. We're looking at months to years on this position, and we saw a big pullback on, I'll go to NUGT in a moment to illustrate. We saw a big pullback yesterday because you saw a flight out of bonds, you saw a flight out of commodities and into the stock market. It was a risk-on day. Now, I've been predicting that we were going to get a rally. We are getting that rally, but the reasons why we're getting that rally are kind of, you've seen a chink in the armor. The rally began, or the anticipation of a rally began on the announcement that last week we had a trade deal, and we knew that it wasn't a trade deal. It was a bunch of hogwash, and it's been debunked by now. Now they're talking about a treaty, a truce, or whatever. So phase one is now pretty much garbage. Now they're changing the talking points to talking about having some sort of a truce with China. In short, it's becoming a mess. Once you lose the messaging and you hand it over to the Chinese, they're going to do what they want with it. Bad move. I think the president made a mistake here with this so-called trade deal. I have to say it. And at some point in time in the future, near future, he's going to come out and realize it, and he's going to put up a tweet storm. And it's going to send this market down. What's going to salvage the market? QE, not QE, right? They're not acknowledging that it's QE, but it's a fact. They're in there right now, supporting the banks, filtering money into the banks. We have the greatest economy in the world, yet the Federal Reserve is putting a lifeline into the veins of the banks. And not only just the U.S. banks, Deutsche Bank over in Germany is getting a lifeline. How are they getting a lifeline from the American taxpayer? It's because they now do not have to have the capital reserves necessary to do business here in the United States. That means that they could take on a lot more risk. The other U.S. banks do not have that luxury. For some reason, we're giving a pass to the Germans on this, and I wouldn't do it. But again, once again, the U.S. public is at risk here. So again, American consumer putting up their tax money for the big banks. So long story short here, U.S. dollar, we broke down below support, and I think that we're going to probably fade here and move a bit lower. Let's check out gold. It had a bad day yesterday. The miners, even worse. what we're seeing here this morning is a rally back off the lows. We are up just over a quarter percentage point on the morning. 1487.40 is the price. And it looks as though we had a bounce off of what was support. We may have put in a higher low here. I'm questioning it. We'll see whether or not this support level holds. Because at some point in time, with the new round of QE and with the weaker U.S. dollar, you're going to see gold catch a bid. And frankly, the price action on stocks yesterday was not wonderful. On a daily basis, on a daily basis, we'll go with Monday through Friday. You saw topping action, meaning selling into strength. We're at resistance. And volume yesterday on that major rally was very, very light. The only exception was the Dow transports. We had volume come in above average, but on the major averages, the S&P, Dow, and the Russell 2000, volume, no bueno, very poor. So that volume was akin to shorts covering. Now, could it be that institutions are waiting for a new all-time high before they go barreling in with institutional money? Could be. Wouldn't be the least bit surprised. Before we leave precious metals, let's check out silver. We are long of silver. We're looking to add more. We are down this morning. You can see on this 4-hour chart, we broke support. We rallied back in an effort to recapture. So I would not be a buyer here. We're not going to speak our book, right? We're going to speak the charts. We're going to apply our theory with regard to global macroeconomics to our trade at current. What should be a rally in these names is not a rally. It's not happening. QE should be sparking a bid under silver, gold. It is not. Why is it not? The reason is that you're seeing bond prices decline and you're seeing yields rally. That means the Fed has to do all the more buying to try to force yields down. And on a weekly basis, I went over this with members last night on Market Wrap, that you need to take a look at a weekly chart on the 10-year yield. And you can see that we closed out yesterday right at that upper band of the declining downtrend channel. So I don't think we're going to have a straight shot here through that upper band of resistance. I think we're going to get a pullback fairly soon. And on that pullback, you're going to see a bid under silver, gold, and especially if the dollar continues to weaken. So silver, looking weak this morning. I would love to say it's acting strong. I can't. It's weak, and it'll probably get a bit weaker here. But I did mention last night on Market Wrap where I want to begin looking at gold to add to our current long position. I just mentioned that we were long of the NUGT. We'll pull up that chart. I doubt there's much action yet this morning. It's only 15 minutes into the new 4-hour bar. And you can see that we caught a bid after hours yesterday. But overall, the trend on a short-term basis is down. On a longer-term, weekly and monthly basis, the trend is still up. That's what I concern myself with. And we are nearing critical support between, let's call it 230, scratch that, to 25.30, 35 spot 30 to $25 per share. It's within that price range that I want to look to. See whether or not you hit a like button on this video, please, if you could. Joking around here, I would appreciate the like. If you could watch for, now we just opened up here on NUGT. We're catching a bid. Actually, we're seeing some selling. We're looking for between $25.30 and $25 per share on NUGT. We'll watch to see if we catch a bounce off of those levels. Then perhaps we'll step in and take advantage of this dip to go adding more to our position. Because think about what we're doing here. We're not treating this as a swing trade. If I buy the market, I'm going to treat that as a swing trade. But purchasing the gold miners, gold, silver, I'm setting up for what ultimately is going to be a bear market very, very soon, within the next year, on the S&P 500, small caps, etc. But in the long term, I want to play the long side with the powers that be. I'm not going to fight the fact that you have a tremendous amount of power that wants the president back in office, mainly the president, and he's got the power, the bully pulpit, to make sure those that can help him are helping him. So we don't want to fight that unless, of course, the markets begin to roll over. What could force that? Any geopolitical event that puts the ability of the president to help spark this market higher out of his control. And we'll be watching for that. That's why we watch the headlines every morning. We take a pulse of the field between us and China. That relationship, or our relationship, is really diminishing quite a bit, and a lot can happen. There's so many flashpoints around the globe. And Brexit, don't forget Brexit. All right, so NUGT, we're looking for a bit more weakness here. I wouldn't go selling covered calls on NUGT as we typically like to do. We've done so a few times this month. I wouldn't do it on weakness for fear of being taken out of our position prematurely at these prices. It's just not worth it. I wouldn't buy puts because you have support immediately below. So it's best just to let your position float here and wait for this correction to end and then wait for that next move up, which I think is going to come fairly soon. Watch the bond market. Watch bond yields. Once we get bond yields pulling back, you're going to see a light lit, a fuse lit under gold and silver. And speaking about that, let's take a look at the 10-year yield, 4-hour basis. Yeah, Moody's, I'm not familiar with their presidential polls. What I like to do, RL, is I like to take a look at Rasmussen. I think that they're the only ones that had it right during the 2016 elections. So I'm a bit biased towards them. So I'll take a look at Moody's. I don't know what their call was back in 2016. I certainly wouldn't listen to the CNN polls or any of those polls. All they try to do is serve is to tamp down suppression of the Trump vote and try to keep them home because they try to make them feel discouraged. And you can bet that's going to happen big time this year, especially now that you have a lot of the social media outlets, Facebook, Twitter, YouTube. I love YouTube, but unfortunately they have been silencing presidential support, the president's supporters, and you're not seeing as much vocal support out of the alternative media on those outlets, and that's not going to help the president any this time around. And honestly, he should have been far more aggressive with them in trying to get them to comply with the law, which they are going against. They're supposed to be platforms, not broadcasters or publishers of content. And that's what they put themselves in the position of. And they're opening themselves up to liability, whereas if they were just a platform, a distributor of content, which is what they are licensed to be or regulated as at current, they are not liable for what is distributed off of their platforms. So at some point in time in the future, they're going to be held accountable. Even Elizabeth Warren speaks about this. So the 10-year yield is rallying this morning, and it makes sense. That's why you're seeing a rally under gold, despite the fact that the U.S. dollar is up as well. So the problem here is that you are seeing topping action. So we do not have a breakout yet on a 4-hour basis. We're flirting with it, but we're not there yet. So what I'm looking for on the 10-year yield, and this is why I don't want to sell covered calls or buy puts on my NUGT position, it's because at some point in time in the near future, we're going to get a rally on bonds, and you're going to see a rally in gold and silver. And what you'll do is you'll lose money on those puts, and you could have capped your upside potential because you sold covered calls. And I don't want to be in that position, because there's a saying, if you have to roll out of a covered call position, rolling a covered option position gathers no loss. And basically what you're doing is you're moving your potential loss out further onto the spectrum of time. And I really don't want to play that game. It's frustrating. It costs you money in terms of fees. And I would prefer just to, hey, Trent, good morning, brother. It's best just to stay liquid right now with your position. We're very close to the end here on the correction on the gold miners and gold, so I'm not going to hedge at this point. It's a bit late. We did so last week. We made money on our covered call positions last week. We did 2 of them. Let's take a look at the S&P futures. All right, so the S&P futures, we are giving up some gains here. No shock. We had a big move up higher in point terms yesterday and in percentage terms, but volume was not wonderful. So what I want to do here is I'm going to take this support or the resistance level off because it did not act as support yesterday. We're going to remove this. And this upper band of resistance should now act as our ceiling before we get a pullback on the S&P 500. And what I want to do here is remove this, clean this up a bit. And I want to draw a new, let's keep this, let's keep it loose. New lower band of support. And at current, we are trading down on a 4-hour basis, not a daily basis, but on a 4-hour basis, we're trading down below the, I keep doing this, the upper band of support. Now, this bar, this 4-hour bar opened up 24 minutes ago. It closes at 9 a.m. Eastern Standard Time. A lot can happen here. We could rally back. Volume right now is fairly light, so I wouldn't be the least bit surprised to see a rally back on the S&P futures. Perhaps not too positive. We do have earnings reports coming out this morning. If they're negative, we could see weakness here. But if we have earnings that come in as expected or better, I wouldn't be the least bit surprised to see a rally off the lows here. I hope the S&P legs up again. Hedge funds are short, and I want to see I want to see them feel more pain. All right, fair enough. I'll take that. I'll take that. Yeah, me too. Okay. So let's check over on Twitch to see whether or not we have any comments. Hey, Twitch. Nothing going on over there. And on Facebook. Hey, Facebook. Okay. All right, so at least we're live. Okay. So moving on to let's take a look at the NASDAQ. You know what, the Russell. Let's go with the Russell first because we've been watching it. And then we'll go to the NASDAQ. And then we'll segue over and into members' stock chart request. All right, so again, no shock here that we're seeing a pullback this morning. We were long of the Russell 2000 last week right here. And we booked our profits. Where we booked our profits is still higher than where we're trading right now this week at current in the pre-market activity. So we showed discipline yesterday. I wanted to buy the Russell yesterday, but I couldn't because I tend to execute trades late in the day. And when you took a look at volume yesterday, it was horrible, simply horrible. And plus, you saw selling on strength at resistance. So my basic discipline is I don't buy into resistance. So I couldn't do it. I didn't pull the trigger, and thank goodness that we didn't. Because now we're seeing a pullback this morning, but that pullback could represent an opportunity. Because what we're looking for, if we hold and we don't sell off hard, we're looking for a breakout here above this upper band of resistance. And it's on that breakout and the close above on a 4-hour basis above that breakout. That's where I want to go looking to add or open a new position. We closed out our position. I want to open a new position on the Russell 2000. So a bit of weakness here, watching for a breakout. Beyond that, I'm not touching it. Let it pull back. Let it do whatever it wants to do. The Russell 2000 needs to prove itself worthy of us buying the shares of the IWM if you don't want volatility, or if you want volatility as I do, the TNA, which is a leveraged ETF, putting you long of the Russell 2000. So right now, it's simply a watch. We'll do nothing until we see a close above a 4-hour resistance level, and we will not buy at the open. If they spike this market at the open, I do not go chasing the market by pure discipline. I may sell at the open, but I will not buy at the open. That's just simply the discipline. I've learned it over the course of time. Sometimes you're wrong, but the vast majority of times you are right for not buying the open. They call it amateur hour for a reason. Don't let these thugs on Wall Street lure you in with their upgrades this, their earnings by a penny that. Don't let them lure you in. Please avoid the headline risk. The NASDAQ. The NASDAQ is down 23 points this morning, down nearly a third of a percentage point. We were lower. We're rallying back. Let's zoom in here. As we did with the Russell, we want to clean this up a bit. Because I want to identify where our support levels are from which to buy at. And here's our lower band of support. And what we're doing is that we're bull flagging out here on the NASDAQ, which is a bullish setup. It's a continuation pattern. And what I'm doing is I'm setting up an upper band of resistance. And you can do this on TrendSpider as well. They do it automatically. I just still draw because I'm using Thinkorswim. You extrapolate out where there might be an upper band of resistance. So at current, on the NASDAQ, we could go up to, on this rally, up to 8,000 in fairly short order. I'm talking about within the next couple of weeks. We could head up to 8,000 on the NASDAQ 100, on this index. So the NASDAQ is looking good here, at least the NASDAQ 100. Watch for a breakout above this upper band of resistance. If we get it, it's game on to the long side. Let's move on to some watch stocks that were requested out of the forum. Okay, so Bill is looking at UGAZ and LABU. I think I have an alert set up for UGAZ. That may have been fired off. And folks, this software here is TrendSpider. If you watch this on YouTube, there's a link below. And There's a 25% discount code, CT25Z, if you're interested. All right, UGAZ. This is a daily chart. Let's first go to a weekly chart. All right, so on UGAZ, we did not come all the way down to retest a key support level. So is this rally this week for real? We won't know until the 3 p.m. hour on Friday. So I'm a little bit skeptical at current of the strength on a weekly basis of the UGAZ. Now, what I would do here is this. We did break out on the UGAZ the week of August the 26th. We rallied. We're pulling back now. The question is, are we seeing a higher low on nat gas weekly basis? If we are, and we begin to break out to new weekly highs, that's very bullish stuff. Now, what I would do here is set an alert. I don't care about it touching. I don't care about it bouncing. I care about it breaking out. Weekly high we're looking at to think about, not necessarily execute on UGAZ. And you can see Friday matters, right? I want to see how we close on Friday. How close to the highs of the week do we close out the week? That's what matters. And the next resistance level thereafter is right here at 2019. Now, before we go to the daily chart, what we're seeing here are higher lows in RSI, which is bullish. We're seeing higher lows on Stokes, maybe. We haven't fully bottomed out and begun to hook back up quite yet. So question mark or caution flag on the track with regard to the Stokes on UGAZ weekly basis. Now, moving on to a daily chart. You can see that I need to redraw this. I should have used a daily chart. So let's remove this alert. Let's modify. All right, so we'll create an alert on a new weekly high. All right. So when I type in Friday, I know that I want to know what's going on at the 3 p.m. hour before I acted on that alert. Okay, so I make a note to myself. So we're looking for a new weekly high here. Let's overlay some automated trend lines. We'll go with the weeklies. All right, nothing actionable. So in short, I would look for a continuation move higher on UGAZ, where it really starts to become sexy as not just a swing trade or a short-term swing trade. but more as a position trade, is if we rally up and through this pivot point here at 2364. I would get excited about it on a rally up and through 1552, because now we're putting in higher lows from this prior low and now putting in higher highs. So UGAZ, I'm not totally excited about, but it's becoming constructive. What else are we looking at here? LABU. I like to use LABU to sell options on to bring in premium. It's on my list of watch stocks. This is a daily chart. We had a very good day yesterday on LABU. We have a bit of resistance here, right where it closed yesterday. We managed to eke out a close above resistance. Let's watch for a pullback here and a retest of support. Where I would get really excited about LABU is a rally up and through this upper band of resistance here. You can see I had an alert that was set, but that expired. So what we're going to do is we're going to remove that alert, create a new one, and these notes just help me when I get the alert or text or email to remind me why I was looking at it and what I was thinking at the time of analysis. So let's keep this going for the next 3 days. And we're good to go. Okay? We can get rid of this one. So LABU, I wouldn't go buying it right now. We're up and into resistance. I would buy on a breakout above this upper band of resistance. So LABU is looking interesting. What else do we have here in the forum? SWAV. All right, Tom. All right, so I delayed getting back to him on this, but I'm going to go over it anyway because I teased it. SWAV. You need to avoid these shares at current. We have a bearish key reversal yesterday. That would imply that there's a good possibility that we move lower. Now, we did break out here on the 4th of October. Now, when would I buy? You have a lot of overhead supply here, man. A lot of it. Let's go to a weekly chart. I don't think you could use a daily chart. We need a smoothing mechanism. Let's overlay. I don't think there's going to be any trend lines here. Yeah, there's not. There's not enough data on a weekly basis. So we have broken out. We broke out here the week of September the 30th. We pulled back. We did a retest. Now we're in Never Never Land, right? So the good news is that we don't have a whole ton of resistance above. It's a fairly new issue. It hasn't even been around a year. So what I want to see here is us hold this support level. And in fact, you can create an alert if we touch it or if we bounce. Weekly, no, I don't want a weekly. I want a daily pullback. In fact, I want to keep it really durable. This confirmation candle, it tells you when you hit that support level. On a 30-minute bar, you'll get alerted. Or you can go out as far as a daily on this chart here, get notified at the end of the day. which is fine as well. So SWAV, weekly support. And this would be a good support level to enter the trade at. Because what you do is you set your stop loss right below set stop below. And we're going to keep this active since this is a weekly chart. We'll go out 12 days. I'm going to keep it active for a trigger twice just in case we bounce off of it twice, which is bullish. Set it and forget it. Now, when else would I look to get bullish on SWAV? I would do so, again, using a weekly chart. On a rally to a new weekly high, or at least above, a close above on Friday. I don't care if we touch or bounce. I care about breakthroughs only. All right, so there's a 4-hour bar. Again, weekly chart, so we'll keep this active for a while. So we're good. SWAV. Any symbols that anybody wants me to take a look at really quick? We are running a bit late here, but I will entertain some symbols. NFLX, RL, you got it, brother. ZM, Arthur, good morning. Hey, could everybody do me a favor? If you haven't hit the like button, if you could please do so. And also, for those folks on YouTube, if you haven't already taken our survey, may I ask you, in the description area below, there's a link to a survey. Very brief. I don't want any personal information. I'm trying to develop a new course around trading, and I'm trying to also get a feel for how I can improve this commentary as well. Moving forward, so I can cater what I talk about around what you're interested in. What I care about really doesn't matter. What matters is what you guys think. So if you've already taken it, it's the same survey as the last time. If you're new and you're just catching this now, please take that survey if you could. I would really appreciate it. It helps me out to identify how I could serve better. All right, so we have two symbols. I'm going to take ZM lockup expired yesterday. I like Arthur Cologne. I haven't heard from you in a while. How you doing, Arthur? ZM lockup expired yesterday. I like the way it closed. Will you buy it here? Okay, let's take a look at it for Arthur. Oh, Zoom. You know, I get surprised with these names because I use these products often. But I never look at the new issues because usually they're so overweighted in debt and expensive, and there's not enough history on the charts to help guide me moving forward that I get concerned. So I'm going to talk about Zoom on a technical basis only, where I look at the balance sheet. Yes, that could influence my decision here, but we'll talk technicals only because at current, I do believe that shorter term, you got it, Arthur. Shorter term, the market's going to move higher, and we should catch a bid on some of these names as well. But they're pure speculation if they're overweighted with debt. So please keep in mind, if the Federal Reserve can't get rates under control and rates continue higher, yields continue higher, I should say that, these companies are going to have a major problem. The ones that are overweight. And I don't know in particular about Zoom, so I don't want to classify Zoom as being overly indebted. They can have zero debt for all I know. I don't know. I'm talking about the new IPO issues these past couple of years. They have a lot of debt, tremendous amounts of debt. And when they go to refi that debt in the future, and if yields continue higher, they may not be able to. So that's a concern that I have about some of these names. So with that said, We're going to talk about the technicals of Zoom only. Now, this is a weekly view. Monthly view is not going to serve us at all because there's not enough data here. So what I'm looking at thus far is obviously we are in a downtrend. Last week's price action is that we had an outside reversal bar engulfing the prior week's move. Not necessarily entirely engulfing last week's move, but close enough for government work. You get my point. Bearish bar, just as you had this prior week here. Now, we do have support that is below. And that's exactly at the 70-60 level. Where did we close yesterday? We closed at 71.11. So that makes sense because we have support below at 70.60. So the chart is looking interesting. I will say that on a weekly perspective. Stokes are beginning to hook up here. RSI is still in a decline. But this is the value of taking your crayon out and drawing a trend line. So far this week, we are breaking out on RSI. Coffee break. Thank you. So let's go to a daily chart. Let's take a look at how we're looking here. Daily chart yesterday looking very promising. I love their product, Arthur. Don't get me wrong. I use it. It's a great product. And I believe that they're now in the facial recognition space. I had to sign up for the platform I'm streaming on right now. And to get signed up, I had to use, I believe it was Zoom, facial recognition technology, just to subscribe. So they're doing some high-level stuff here at Zoom beyond just basic Skype-type stuff. So it's very interesting. So I like the company and their product. Now, yesterday, getting back to the technicals, what we saw was an outside reversal day. Bullish stuff. We recaptured support. I like the setup here. Now, when would I buy? Right here. Daily breakout. A reminder of how we're looking on the weekly chart. Yeah, Trent, it did. Yeah, Trent just put a message in for those that are watching on other platforms. One of our YouTube viewers, Trent says, facial recognition technology to subscribe. That's scary. Yeah, it's the brand new world, right? And from what I understand, 5G that's coming around the corner is going to be really scary stuff with regard to facial recognition, voice recognition, whatnot. Really Orwellian stuff. So I'm not really looking forward to it that much. So getting back to Zoom, I want to keep this active for the next few days. I like this chart. I like the chart. So let's drill down. All right, so we've done the weekly. We want to continue with our multi-time frame analysis. This stock appears to be a buy. Why? On a 4-hour basis, yesterday, what we did was that this is tried and true. This is part of my textbook of trading for when I want to look to get long. Besides hitting that like button, I like to look at the 4-hour chart and get a breakout. And then ideally what we do is we pull back and get a retest of support. That's what happened yesterday. So Zoom is looking very, very good on a weekly, daily, and 4-hour basis. I like Zoom. I think that it goes higher from here. The only caveat, flying the ointment, I'll throw in there also is their earnings. I don't know when earnings is. I am not a big believer in buying into earnings, so I would research that before getting long, or definitely don't short this stock in any way. Before you got long of it, I would look to see when earnings was. Moving on to Netflix for RL. Let's take a look at that bad boy. I think they're reporting earnings this week, right? They're reporting earnings? All right, so Netflix weekly basis. In fact, I want to go really high level here. Monthly view. So obviously, Netflix has been in a trading range at best, in a downtrend at worst. So let's throw up some. First, let's go with the automated. Netflix is announcing earnings this evening. Okay, so great to know. And Zoom, Arthur, thanks. Zoom is reporting in December. Can you just confirm that for those that are watching over on Facebook and Twitch? Thank you, sir. All right, so interesting. So what we have here, monthly view of Netflix, is a retest of the rising lower band of support so far this month. We are now past, or at, I should say, the halfway point on the month. Great. Thanks, Arthur. Appreciate it. So Arthur is confirming for our friends over on other platforms that Zoom is reporting, or they will be reporting earnings in December. Thank you for that, Arthur. And great selection to bring to the table here. So Netflix is looking interesting as well. Again, we are bouncing off the lower band of support, monthly basis, past the halfway point. I'm sorry to repeat myself. And we are seeing signs of life on RSI, which has been in a downtrend, and that downtrend has not ended yet. We are in a descending wedge formation, which usually resolves to the downside, but not always, right? It's no guarantees. There's no guarantee to anything. So we could quite possibly see a breakout here. I like the price action. Let's drill down to a weekly view. We're going to overlay monthly support here. So when you use TrendSpider, the reason why you're seeing different types of lines here is because the dashed lines represent a secondary time frame. What does that mean? It means that I'm using a weekly chart. However, I want to take a look at where my monthly resistance is on a weekly chart, and it reflects in a dashed line. Now, the solid line reflects the primary time frame, meaning I'm using a weekly chart, and the solid lines represent a weekly support and or resistance level. So what we're looking at here is a really good chart. We bounced off of weekly support. We are at current above, as I mentioned earlier, above monthly resistance. The question is, do we hold it after earnings today? Now, let's do a hypothetical here. Let's say that Netflix disappointed as they did last quarter, if memory serves me. Let's say that they disappoint and you want to go bottom fishing. Not that I'm a big believer. If they disappoint by a mile, I wouldn't do it. If they disappoint mildly, you may want to just take a look at buying the dip at a weekly support level at the 256.49 level, which is rising. So that's going to change week to week. Actually, even higher. Let's just round it off. 256. Okay. That would be a good support level. If we get a flash pullback, because the knee-jerk reaction is generally the wrong reaction on most things. All right, so many times you see an earnings report come out, immediately the algos will take it higher. All of a sudden you get a reversal bar. Same thing happens after a Fed announcement. After any major announcement, the algos usually get it wrong and you get a reversal. So if you get a knee-jerk reaction down to the 256 level, that may be a buying opportunity. However, I would use a stop right below that support level and keep that loss very, very small. And I would wait until the morning, not the after hours session tonight. I would wait for the morning open to make that trade because it's far more liquid the following day when you have the markets open. Daily chart. All right, so interesting in that now what we're doing is we're using the monthly time frame as support at current in dashed line, and now we have a daily time frame in solid line. And what you're seeing here is resistance above on a daily basis. So let's do a hypothetical and say that today wasn't earnings day, right? It was just any other day. I would buy these shares on a close above this upper band of resistance, but we can't do that today, meaning I wouldn't do it today. Why? It's because we could break out on a daily basis, but then we have earnings that are set to be released after hours. Do I want to buy into earnings? No. Could you open up a call spread, getting long with a cap on your losses? Yeah, you can do that. You limit your upside, but you also hedge that long side. But I would not buy the common shares. Too much money to put at risk for the shares in front of earnings. So I would avoid until after earnings to open up a position on the common, and I would only open up that position on either A, a retest of support, or B, on a breakout on a new daily basis. And with that, folks, I want to thank everybody for joining on YouTube, Twitch. Eventually, we're going to get Twitter, and on Facebook. Thanks for joining in. Everybody have a very profitable day. If you haven't already done so, those folks on YouTube, please take the survey below if you haven't already done so. Click that like button. It helps me out with the algorithms on all the major platforms. And enjoy the day. Be well.